Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Nissin Foods Company Limited annual report. Nissin Foods Company Limited offers a diverse range of businesses and services across various markets globally. At the core of its operations are instant noodles, which it manufactures and sells in multiple countries including Hong Kong, mainland China, Canada, Australia, the United States, Taiwan, Macau, and internationally. In addition to instant noodles, the company also produces retort and frozen foods, beverages, snacks, and vegetables. It further extends its product line with fruit juices, cup noodles, and sauces. The company's manufacturing capabilities are not limited to food products. It also manufactures packaging materials for its instant noodle products. Beyond production and sales, Nissin Foods Company Limited provides various services including publicity services and administrative management. The company also offers human resource services, further expanding its scope of operations. Furthermore, it trades in instant noodles, vegetables, and packaging material products, solidifying its position as a comprehensive food solutions provider. Nissin Foods Company Limited maintains a market capitalization of $8 billion, broadly in line with the industry peer group. Nissin Foods Company Limited trades at a higher price-to-earnings ratio of 23 times and a higher price-to-book ratio of 1.98 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 23% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The company have a dividend yield of 2.21%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth for Nissin Foods can be attributed to several key factors. Firstly, the company has experienced significant sales growth in both Hong Kong and Chinese regions, with a notable increase of 32.1% in Chinese regions. The expansion of its instant noodles business, particularly in the premium segment, has also contributed to revenue growth. Additionally, the introduction of new product offerings under various brands, as well as partnerships with popular franchises such as Hatsune Miku, have helped drive sales. Furthermore, Nissin Foods' digital marketing efforts through WeChat mini programs and its expansion into new markets, including Vietnam, Korea, Australia, and New Zealand, have also contributed to revenue growth. The company's premiumization strategy, which focuses on offering high-end products with unique features, has been successful in driving sales. In terms of specific numbers, the Chinese mainland segment saw a significant increase of $551,471, while the Hong Kong segment experienced a year-over-year increase of $1,539,905. Customer A revenue also increased by 16% to $103,332. On the other hand, the primary drivers of revenue decline for Nissin Foods are relatively limited in scope. However, some factors that have contributed to revenue decline include a decrease in trade receivables and an increase in allowance for credit losses. Additionally, consumers' preference for eating out and outbound travel has negatively impacted sales of frozen food products. The company's financial performance has shown a significant improvement in the recent period. A notable increase of 64.9% was observed in net income, reaching HK $331.4 million. This substantial growth can be attributed to various factors that have positively impacted the company's profitability. One key indicator of this improved performance is the change in profit margins. The gross profit margin has increased by 0.2 percentage points to 34.6%, indicating a slight but notable improvement in the company's ability to maintain its pricing power and control costs. More significantly, the net profit margin has seen a substantial increase from 5.3% to 8.3%. This significant jump suggests that the company is becoming more efficient in converting revenue into actual profits. The reasons behind these changes are likely multifaceted, but they can be attributed to the company's ability to manage its costs effectively and maintain its pricing power in a competitive market. Additionally, any strategic decisions made by the management to optimize operations or reduce unnecessary expenses may have also contributed to this improvement. Overall, the increase in net income and profit margins is a positive sign for the company, indicating a strong financial health and potential for future growth. The company's financial performance indicates a significant milestone. It is generating positive operating cash flow. This achievement signifies that the business is capable of producing more cash than it consumes, allowing for investments in growth initiatives and debt repayment. The positive operating cash flow also suggests that the company's operations are efficient and profitable, enabling it to cover its expenses and generate excess funds. The performance of various segments in the given data reveals a stark contrast between Hong Kong and Chinese mainland. While Hong Kong struggled with poor revenue and result, Chinese mainland excelled with significantly higher figures. In fact, Chinese mainland's revenue was $2,271,959, a substantial amount that outshone Hong Kong's performance. Similarly, the result from Chinese mainland stood at $328,517, further emphasizing its dominance over Hong Kong. Unfortunately, the data does not provide detailed information on other regions such as Vietnam, Korea, Taiwan, and Australia. However, it is clear that these areas did not fare as well as Chinese mainland, with no separate revenue or result figures reported for them. In contrast to Hong Kong's poor performance, Chinese mainland stands out as a region of note in the given data. Management's outlook for the company appears to be positive. Despite the implementation of new accounting standards having no material impact on financial positions and performance, significant investments are being made in acquiring new land parcels and constructing production facilities, totaling over RMB 140 million. This suggests a commitment to growth and expansion. In terms of long-term strategy, management is cautiously optimistic about business development across various countries and regions. They plan to achieve this growth through premiumization and diversification strategies, indicating a focus on increasing revenue and market share while reducing dependence on any one particular area or product. Overall, the company's outlook suggests a proactive approach to growth and expansion. The company has a history of paying dividends to its shareholders. In 2024, it paid out a total of $165,112,000 in dividends. This payout is consistent with the company's commitment to returning value to its investors. Furthermore, for the year 2025, the company has proposed a final dividend of $165,738,000, indicating that it will continue to prioritize dividend payments. The dividend per share for 2024 was 15.88 HK cents, and the proposed dividend per share for 2025 is also expected to be around this figure. This suggests that the company is maintaining its dividend payout ratio, providing a stable source of income for shareholders. Overall, the company's decision to pay dividends demonstrates its focus on shareholder value and commitment to returning profits to investors. That concludes the financial summary for Nissin Foods Company Limited. Feel free to comment below, and I will be happy to answer them when possible.